Cameron, great to have you on the show, and thank you so much for your time to us this morning as we try and understand the global perspective on India. If you even look at how Indian markets have performed versus markets of nations directly involved in the war, we seem to be worse off. Part of it, perhaps, is because of the way FIIs are looking at India right now, isn't it?
What I would say is that in many ways they're just not looking at India, that they are chasing what seem to them more compelling stories. The AI story there seems to be no way to kill it, despite all of the earlier angst. And in the emerging markets space, that's meant that recently we've seen big uptick of flows into funds dedicated to Korea and to a lesser extent, Taiwan.
Cameron, morning. The question that a lot of people here are asking, we see a lot of flows into precious metals, into gold, into silver, the way that they've moved over the last year and a half or so. Does this latest crisis accelerate that? And do we see a further move away from risk assets?
So the initial reaction we saw, and we obviously look at it through mutual fund and ETF flows, was a lot of activity in the sector fund space, but a pretty muted overall reaction, which is consistent with the fact that if you overreacted to previous iterations of this crisis, you usually ended up losing money. The markets roared back, the flows roared back. So there was already a slight movement away from risk assets that didn't have that much to do with the events in Iran. Had more to do with questions about the durability of U.S. growth and when you might see profits in the AI space. But until people are convinced that this is really going to play out over a longer period of time, I think the risk off is going to be there, but it's not going to be quite as significant as you might expect given the sound and the fury.
So Cameron, here's the question: where does money go? Because we've seen that money is being taken off emerging markets, all dependent countries for sure. Kospi is a prime example. It's not that gold, silver are receiving capital. Bitcoin is not receiving any flows, and the U.S. markets have also been, well, not kind of selling off, but sulking in the last few days. And Dow futures currently are down 1,100 points. Where is the money going?
So a certain amount of it is going to money market funds, moving to cash. There is strong conviction, certainly, in the universe that we track in the energy space. We've seen last week, we saw record-setting flows into energy sector funds, and certainly eye-catching flows into some of the subgroups like nuclear and uranium, pure oil plays, pure natural gas funds. And not surprisingly, demand for direct exposure to rearmament and military production companies is very strong. They had, I think, their third best week since the beginning of last year's fourth quarter. So those are two high conviction areas that are seeing certainly money come in through the fund channels.
Cameron, nobody can really predict how quickly this conflict will end. But my question to you is, because you've studied similar conflicts play out over the course of the last many years, how quickly do flows change and how do they normally change? Have you seen patterns emerge? So when this does dissipate, what do you anticipate will happen?
I think certainly from the perspective of the emerging markets, appetite was building before this had happened. We were seeing a definite broadening of flows beyond just the usual suspects, which were funds dedicated to mainland China and the broad global emerging markets funds. So, assuming it doesn't go on too long, I definitely think there'll be a snapback. Investors are looking to sort of broaden out beyond US assets, which are pretty richly valued even with the correction. And certainly at the moment in the fund space, people are betting that it won't go on forever, that it will burn itself out pretty quickly. The sort of certainly the expensive missiles that people shoot at each other these days before the drones fly, there's a limited stock of them.
Cameron, what is the optimistic case for investment in India right now?
I think India faces sort of a slow bounce back. As I said earlier, the AI story, despite some very major questioning of it this year, has proved incredibly durable. And at the moment, the interest is in the first movers who's building the AI model. So that sort of takes you, especially to US and mainland China plays. But the secondary trade in it hasn't spread out to countries like India, who would be expected to find the applications for it and provide the sort of concrete uses. At the moment, the secondary money is going into the infrastructure needed to make it happen. So infrastructure funds, utility funds, electric energy funds.
Thank you so much, Cameron, for speaking with us this morning.